That's practicing my intros. Probably need to work on that. And for some reason, I don't seem to have been following Google. It wasn't my tickers, and I just found that weird. And I saw that pop around on StockTwits, and I said, hey, let's go check a look at Google. So yesterday I set some alerts, and today, gling, 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 everything got triggered all over the place. I have a bunch of alerts I have to go through. And since we're approaching end of month, then I guess I'll be busy Saturday. I just wait, guys. Honestly, getting close to the end of the month, you have the power of that weekly candle for Stan Weinstein to confirm breakdowns or breakouts. Plus, you have the confirmation of that all-important monthly candle for the prevailing trend. I just don't see why you wouldn't wait. Just wait it out, guys. Wait for that candle to... Because right now, you see we're the 27th of March. Tomorrow's Wednesday, Thursday. There's 3 more days. Is stock market open Friday? Yeah, it's not a Friday Saint. I don't know. Good Friday. I don't even know if the stock market's closed on the religious holidays. Either case, if you don't wait for the candle to finish, you're just playing with fire, man. This is a monthly candle. This is how I do it in my traditional framework. And right now, I always draw my trend lines horizontal, excluding the wicks. That's the noise, the intra-day, intra-weekly candle noise. And you see during the month, the price action was below that trend line right here. You see that long wick? And if you would have said, look, it's below the breakdown line, I'm going to short it. And then whoop, the price action went all the way back up. And within that pattern, and you would have just been stuck. After that, it's either your sell stop would have been hit, or it's just a gamble. So you're just you don't want to be in that situation. You have to wait for a candle close below that breakdown line. So check that out right now. If what we need to do is on the monthly candle close, you need a close below 10:30, 10:31. 10:30 maybe for a round number. If you have a close below that, then on the monthly candle you do have a breakdown. You have a target of that top pattern. Although it's a short pattern, 1, 2, 3, 4 months, measured move would bring you all the way back down to 900. Could have some turbulence on the way of this previous resistance turns apart, what I call the wall, right here around the 980, 990 level. And after that, you'd have to go through this support right here at the 920 level to reach that target. That's why I always have target considerations where I shorten my target to increase my chances of reaching my target and not have to be forced to go through important support. Lowers my risk to reward ratio, but increases my probability of reaching that target. That's all good. But I'm diverging, guys. This is about Stan. And I just came to the monthly to show you that if you have a breakdown, a classical chart breakdown on the monthly, then you're stacking the odds in your favor. When you go back down on the weekly, you feel like a god because you have the power of the trend on your side. And this is all the detail of the monthly candles, the ups and downs. And look at that. Google has been going into stage 2, stage 3. Stage 3 continues to stage 2. Look at that nice breakout of that volume. This candle right here. Look at that, man. Beautiful Stan. And this is not resistance. There's like this fake, I don't know, this candle here, which created some resistance above. There's no resistance. So even if I remove that candle, My TWS software has not ignored the actual price action, and my Ichimoku cloud still draws as if this candle would be here. It's kind of weird. So it kind of skews a little bit of this there, but this would have been a pure breakout without any resistance on top. You see, you have that long base, and the Ichimoku cloud would just be very thin all around here, having low support under, be a little resistance on top. So this is a nice breakout on this candle, or maybe you could have even had it. Either case, that candle, that weekly candle, close up there, and you had that bigger base, smaller base launching pattern. And did we have triple confirmation? Look at the RSI. Yeah, going for the midway point higher. Triple move, quadruple move, because I don't have any resistance on stop. Even if you see it here, it's not really there. And off you went. And after that, you see you had the pullback within 1 to 3 months, go back down on the light volume, and then the price action starts going back up, and there it goes. Kind of shaky. We're around the 30-week moving average. You would have been triggered out here if you're a trader. Kind of ranged again right here. And when did it really take off? Maybe this base right here for this candle. Yeah, this candle right here. So right now, yeah, another breakout candle. This one right here, which is this candle. And then you had that continuation breakout. That stage 2 that failed here, that became a stage 3, and then continued here off this base. Stage 3 that became a stage 2 again. Off it went, and went up all the way up. Google hug that 30-week average tight. Sometimes you don't. That's like not A plus setup. You want higher, faster angle where the price action really pulls the 30-week moving average in a more aggressive line. And where the price, like here, see that black space? That's what you want when you're in a stage 2. You want to be as far away as the 30-week moving average as possible. You want to be able to draw a trend line that's not under the 30-week moving average or close to it. You want to be able to have some price action where the trend line is way above the 30-week moving average. And the more aggressive it is, the higher it goes, the faster it reaches its target, the faster you get out of that trade on violation of the trend line. And you could put that risk somewhere else, right? Time is money. And that's the way it is for Google. But now what's catching my attention is this stage 3 right now that seems to be in, and the top formation that's being set right here. So right now this is the breakdown line. We're right below it, and you see that measure move from the monthly candle. And you see that target where I let's put it back. Can I get all the way my candles back? Oh, okay. Just put everything back. Okay. Here's the measure move. I just want to see how the Ichimoku cloud reacts to the monthly candle target. This was the original target, right? I said for my monthly candle for that top breakdown. And I said that I have target considerations. If I run into walls or support, then I would move my target. That was a shorter arrow you just saw. Now on the weekly, I have my Ichimoku cloud activated. And all this green zone is support. And the final support being that red line. And you see right here, that's the turbulence. And that's the only thing that I have that's not going to make me enter on a short side is I would like to have to go through that cloud first. So does that mean that I'm going to miss part of the initial drop? Probably. But I've seen examples, and I'm really thankful for stageanalysis.net there that showed me this. I've seen a lot of examples where the support really holds up. See right here, you think it's a breakdown. You could have said I'm in a stage 3, it's breaking down. Let's go back. The examples all over the place. I don't want to see that green candle. Bye green candle. Okay. Here you're in a stage 2, stage 3. Oh, I'm in the top. I'm going to short right here. Check it out. The volume. It's increasing. Red volume on this breakdown candle. Let's look at the RSI. RSI going from halfway point down to negative territory. It's a short. But you have this support right here, man. And it really helps visualize because sometimes your subconscious is going to, don't want to admit that there was support created here or a little lower, or then you're just gonna want to trade, right? For whatever reason, you want to trade that day, you want to make money to pay a parking ticket. I don't know, whatever reason, your brain plays tricks on you, and you see that support. It just refused that breakdown, and it went back up. So really, really try to wait until a bigger pattern emerges, and you put chances on your side. So right now, even if I have my monthly candle breakdown, you could probably play on the monthly candle, play that breakdown, but with the target that's reduced right above that support, play that. And after that, wait for the chart to morph. Maybe it's going to bounce back, add more candles. Maybe it's going to take a few weeks. And when you get about that area here, right here, that area that's under the cloud, below that breakdown line, or even here, you could have a long candle that goes all the way down here, below that breakdown line, then you could enter that stage 4. Or wait maybe for a pullback on light volume. Stan says there's less pullbacks on breakdowns than breakouts. Either case, you could wait, put the chances on your side, or else look for another A+ stock for stage 4 or stage 2. There's no rush. If you don't feel it, the setup, don't force it. There's always other setups, always. And let me put that alert right here in case we have a stage 2 continuation. Who knows, right? Maybe it's not going to go down, and maybe it's just going to go back up. I'm going to put an alert for that bigger top pattern that could be in progress and closer to going through that cloud. Just want to see if I had. Yeah, it would have been triggered out. Right now, traders and investors would have been out right here at that violation of the 30-week moving average right there. That candle below there, that's you don't want to tolerate any of that. So I'm wondering how many other people are on the Stan system, on stage analysis system, right? Framework, and they've triggered out, and that's just going to create a snowball effect of trigger outs and bring down the price down. And is that what happens on breakouts? People they want to chase the good money, and then it just goes up, and then just piles out, and you have huge volume. And then you're on the good side of the 30-week moving average. Look, I don't know. Sometimes I just have fun thinking that stuff out loud. Does it really matter? No. Do the reasons, maybe there's different reasons for why the price goes up or down. Maybe those reasons change. I can't control all that. That's why correlations, I played around with them. I don't care for them at all. It's fancy. You overlay charts. It looks good. At the end of the day, I don't trade correlations. I trade charts. And and you can have fun with that. But correlations are correlations until they change, and then then you lose all your money because that correlation didn't hold. It just does not make sense. Keep it simple. One tradable chart that's liquid, lots of volume, so you're able to get in and out without too much slippage. And that is all you need. It's simple, right? All the rest is noise and distractions. All right, Google, stage 4, getting close. I'm saying if we have a monthly close or weekly close below that 1330, it's definite stage 3 confirmed. Could have been confirmed right there on the previous weekly candle. It's a stage 4 breakdown, but I would not play it until we breach that 930 level. All right. See ya.